so what was the unique insight with which we started the company? It was based on the previous experience of building SaaS companies. That every SaaS company shouldn't have to build certain components themselves, and we should be able to provide that abstracted with an API. That was a unique insight with which we started. And yet, when we were in the process of getting customers, we lost track of that part. Rather, we built an API first product based on all of that, and yet we thought of trying to get anybody as a customer, which is the engineer mindset of challenge accepted mode, to say, okay, hey, I can solve the problem. If e-commerce company shows up, let me try and solve it for them, right? And we went a little bit everywhere to try and solve the problem through configurations and all of that. And the realization through that iterative phase of this figuring out was, there is a limited, it's not a question of can you solve that, it's a question of can you solve it in a time, the limited amount of time to get to that inflection point.
Welcome to Prime Venture Partners Podcast, a podcast for entrepreneurs looking to build and grow their startups. Learn about uncommon strategies and common traps from makers and doers of startup ecosystem.
Hi, everybody. This is Sanjay Swamy here from Prime Ventures. Welcome again to a new episode of the Prime Venture Partners podcast. This is likely to be the last podcast of the year, of the calendar year 2020, which, despite all of the challenges that everyone has faced, I think one of the clear takeaways here has been this is the year of SaaS. And I'm delighted to bring a founder on here from the SaaS industry, and one who actually enables a lot of the SaaS companies around the world to be successful. My guest today is Krish, founder and CEO of Chargebee. Krish, welcome to the show.
Thanks so much for having me, Sanjay. Glad to be here. Thank you.
Wonderful. So Krish, as I said, this has been the year of SaaS, but SaaS companies also take a lot of time to develop. There's a lot that one goes through in the, I would say, 0 to 1 phase, 1 to 10 phase, and then from that point on. Do tell us a little bit about your journey. We're not investors in the company, sadly, but we've known you right from the beginning and been big cheerleaders and supporters. But would love to hear you share with our audience, about your fabulous journey.
Sure. Thank you. I still remember your diligence call on behalf of Shekhar from Axel. Thank you. So we started Chargebee in 2011. We bootstrapped the company through a year and a half of building the product and getting those alpha beta customers. And then we raised capital from investors. So even after launching the product, the 0 to 1 journey was not a straight line. To give some context, my co-founders, all 4 of us are co-founders. All of us come from engineering background. 3 of my co-founders have built SaaS products previously at Zoho. And that's how we all came together. I come from product implementation background. And when we first-time founders, when we launched the product, it took us close to 12, 14 quarters to get to that right first $1 million. And that's the reason I said it's not a straight. The reason I said it's not a straight line is around that $500,000 mark is when you realize that the natural constraints and the advantages with which we build also becomes the reasons why you attract a certain types of customers. We built everything with inbound because we built from Chennai, but built up something global. From the beginning, we focused on North America, European markets because the problem was subscription billing as a problem was more relevant and the more mature businesses were there, and we focused on those markets. And because it is inbound, we found different types of businesses that were looking for this solution. And inbound, as you know, the SEO, SEM, all of that attracts either e-commerce companies and SaaS companies and also some agencies. All types of businesses found us, and some of them became customers. And as first-time founders, of course, we are also enthusiastic about anybody who would show up at your step to say, hey, I want a solution, and then we are trying to recruit them as customers. And that happened with all enthusiasm. We want to serve and learn from them. But what happened in that journey of that figuring out was, I think, sets us up for either a lot of pain or success. And thankfully, we had some good advisors to help us through that phase to say, hey, who's your customer? Are these the right customers? And are you, what kind of a seed are you planting that would grow in a particular way later? And I think those kind of questions were where we spent a lot of time in that 0 to 1 million. I'll pause here to let you ask a particular directional question that would be helpful for the audience.
Sure, sure. So you talked about the 0 to 1 phase, identifying the right types of customers as you establish product market fit. What were some of the decisions you all made in your choice of customers, customer segments, and how has that stayed consistent as the company has scaled through a couple more phases since?
Sure. Um, so um, when we try to define, so what was the unique insight with which we started the company? It was based on the past previous experience of building SaaS companies, that every SaaS company shouldn't have to build certain components themselves, and we should be able to provide that abstracted with an API. That was a unique insight with which we started. And yet, when we were in the process of getting customers, we lost track of that part. Rather, we built an API first product based on all of that, and yet we thought of trying to get anybody as a customer, which is the engineer mindset of challenge accepted mode, to say, okay, hey, I can solve the problem. If e-commerce company shows up, let me try and solve it for them, right? And we went a little bit everywhere to try and solve the problem through configurations and all of that. And the realization through that iterative phase of this figuring out was, there is a limited, it's not a problem, a question of can you solve that, it's a question of can you solve it in a time, the limited amount of time to get to that inflection point, and develop deep expertise, and also a product that where it resonates beautifully for one segment of customers who are able to champion and appreciate what you have built. So we had to make certain choices, like letting go of, let's say, even though multiple markets are attractive, we had to say, okay, let's stay focused on SaaS and SaaS-like businesses for a period of time before we focus on more segments. So those kind of early choices were very helpful. It was a little painful to say we are not going to focus on certain segments. But having said that, there are always adjacencies. We all play in adjacencies in our customer base, where some customers like Soylent, which were led by a CTO as one of the founders, they were behaving like a SaaS company. We could actually make our API first product work for them. So the product works for multiple segments does not mean you should not have a strong hypothesis. So these were some of the key learnings for us early on in terms of first time mistakes, to deliberately focus on the segments that work for us, and also iterating on our pricing to ensure that it was aligned with our customer success, and also it acted as a filter to remove certain segments that we did not want to serve. Like, for example, we deliberately have a freemium pricing model, but it's not free forever. You start with a freemium model, but when you hit $50,000 of aggregate invoicing, you automatically move into a paid tier. So we want our customers to know that at some point this is going to be a paid product, and we want to offer the best service to scale with you, but don't think of us as free. And it also acts as a filter for certain segments. So these kind of, and it was a little scary to introduce these iterative, these kind of pricing changes for fear of losing existing customers, because we are selling a $49 product, and we were afraid of thinking, hey, will enough people actually buy the product? But it turned out to be good decision, because that's the only way. Only by changing the pricing we will actually know what resonates with the market and all of that. So those were some interesting changes that happened during that phase that taught us a lot.
So that's very interesting, right? Because again, a lot of times we tell founders, if you underprice the product in the beginning, you're sort of making this a very small market for yourself. Potentially, it's very hard to raise prices. And B, finding price discovery as well. You don't have to wait to prove things out too much, right? Get to that right price point. One of our SaaS companies actually here, which is India based, they kept doubling their price with every customer they talked to until they got serious pushback, and that was a way to establish price discovery. Um, so let's talk a little bit about, you talked about the 0 to 1 phase, and you said that took all of almost, um, the 3 4 years really, right, in the making for that to happen. And that's when you sort of clearly knew exactly, that this was something that had product market fit in the segment. Um, and as you scaled from the next phase, right, the 1 to 10 phase, you would have had the opportunity of different geographies, different customer segments, different, many companies try to quickly go up market because churn is very high in the at least traditionally in the SMB segment. And you know and the cost of sales and the sales cycle is much larger, but it's less churn in the higher end segments. What has your journey been, and along these lines, and what are some feedback and advice you have for founders who are setting out, and at that stage?
Sure. So the context of our market is that till recently, at least 2 3 years back, we were this is a very nascent market category as such to some extent, because of the build versus buy argument that still goes on between the CTO and the rest of the organization, right? And in any of those categories, selling to early stage customers, you are basically selling to, for an API first product, we were selling to the CTO, and then it's always against the ego of the person to say, hey, you shouldn't be building it yourself, means that's challenge accepted. Right?
Mm-hmm.
We don't want to say that. How do you change that perception, right? Things like Freemium goes a long way in helping to say, hey, it's not that you cannot do it, but as you scale, you will need this and this and this. Your business users will start asking more things, so you probably don't want to build. So that is how we tried to frame it, and having Freemium and other things helped change that, shift that argument a little bit to remove that objection and get more conversion in the early stage for the smallest segment of customers. So to put it in context, is 0 to 1 million SaaS companies, right?
Mm-hmm.
Let's imagine that's the first persona. There is the next phase, which is once somebody establishes product market fit and then scaling between that $1 to $5 million. There is again that, so we think of ourselves as a product where our customers choose change billing system only probably 4 or 5 times in the life of their journey.
Right.
When you are starting out, when you have product market fit and you know that something is working, but you don't want to spend any time here, and it's mostly a second time founder, or they are hiring an operations person to hand over the billing related things, or a finance person comes in and then they decide this is suboptimal, I don't want to do it in Excel sheets, or the CTO decides that no, this is not what I'm going to keep building, so let's do that. The third one is the between the $10 to $25 million stage, when you are beginning to scale and you are setting up the leadership team, and the founders are giving away things to the next level leadership and allowing them to operate. And it's either a director of finance or an operations person, somebody who comes in and then they decide that I have to change the infrastructure. And sometimes they go after multiple infrastructure tools, like including your CRM, accounting system, and all of that. And that's another third stage. The fourth stage we think of is you are able to dream about an IPO, like in 2 years, 3 years time, and you probably are going to pick this anywhere between $40 to $60 million is another stage. And then probably then the only other opportunity is probably post IPO or something like that, right? That's a segment that we don't play in today. This is the context of how we think about our customer segments. In that context, we have now defined it. Now I'm talking about as if we had this all figured out, but so bear with me. But in hindsight, right, I am now able to define the segments as 0 to 1 is startup segment, $1 to $25 million is our scale up segment, and 25 to 100 is a growth segment. Internally, that's how we look at it. And the reason why we segment it differently is their buying motion is different. The messaging and positioning for each of the segment had to be different. And who purchases or who makes a buying decision is also very different in each of this. And our product, right, also had to grow with our customers. So the way we have driven our roadmap is 60% of the roadmap is driven by our existing fastest growing customers who are pulling our product to the next stage. So if we focus on our top 50 customers, then what happens is they are growing really fast beyond the 100 million. Then then we are able to deliver. We are aligned with delivering the capabilities for them. Then the product is already ready for the 2,900 other customers who are following them.
Right.
So that's how we looked at the the product roadmap, and that can scale to the next segment. But the challenge is the go-to-market motion is not the same, even if though your product may be ready.
Hmm.
So we are used to selling through freemium and then a quick 20 days kind of a sales cycle in the startup segment. And suddenly, what is required for a 5 million or a 25 million company is something more sophisticated. They have existing systems. Changing a billing system is like a spine surgery. If somebody is afraid of changing it, then we had to put in the right go-to-market motion along with this. So which means that sales team cannot go in and then push for a sale quickly. They had to consult, understand what all is there in the existing system. How do I help you with change management? Evaluate, make them feel safe about the change, and then handhold them. For that, we had to change sales methodology, where the same salespeople who work for successful salespeople who worked in startup segment needs a different sales methodology for the scale up segment and then the larger segment. So we were focused on building this organizational muscle to teach new sales methodology for salespeople, set up pre-sales team to complement the sales people. So which means that there was a combination of a pre-sales and a salesperson for every prospect, and we continued doing that. So to put this, I'm actually talking about a lot of things in terms of what to do, right? But let me give some I'm going to take a minute to just give some context about at what point. So between the 1 to 5 million phase, right, you realize that if you are selling a 4K product, ACV, what does it take for you to go from 5 to 10 million in, let's say, 4 quarters? How do you double the revenue?
Right.
Now, the number of customers you have to acquire suddenly starts looking a little scary to go from to the lifetime of whatever you have done in the company to get to the 5 million. You want to replicate it in 1 year. How do you do that? Now, suddenly there are only few levers that are available for you to go do that, right? Which is your pricing or your ACV of your customers that you sell to, and then number of customers you can acquire. And suddenly you realize that which are the ones that are the most attractive and most feasible, given where your product stands and given the maturity of our company. What do we do? So what we did was at that point was when we decided to say, let's do what we have done till this point for 5 to 10. But by the time we get to 10, definitely it's going to get harder to go from 10 to 20. So what are all the foundations we had to put? So what we did was that 1 year, we built an organizational muscle to one, set up the middle management layer in the team, and then setting up the sales methodology, and then preparing ourselves for the upmarket move so that the sales motion changes, GTM teams are structured. All of that happened for 1 year while our execution was focused on whatever had worked till that point. I think so. Those were some things I think we got right that helped us to consistently double revenue from like that 5 to 10, 10 to 20, and so on and so forth. Like so that is how we did that, Sanjay.
Got it. So, how much of this is, as we said, you initially I guess US was your key market, but now you have customers all over the world, certainly in several geographies, right? And at what point did you feel that you had to expand? Because I guess there are multiple things you could do, right? As you said, change your ACV, increase the sales team, etc., etc. But there's also the segment you go after in terms of the tiers of customers as well as the geographic expansion, right? And you guys have kind of done all of the above, very methodically. So when did the geographic expansion come into your growth?
Right. Actually, we are still focused on the same geographies where we had sold, because inbound we had North America and Europe as the primary markets, and that those continue to remain the primary markets along with APAC. APAC is 5% of the business, but North America continues to be 60% of the business. We have deliberately steered away from temptation to go into multiple other geographies where there are still opportunities, like for example Japan or other markets, because when we tried having feet on street in Europe, what we learned was, especially in the upmarket move to sell $50,000, $100,000 deals, what happens is you would think, okay, having local sales presence would help, and then we tried doing that. And what we learned through the failed attempt was, when we tried to do that in Europe, was if we don't think of this as a holistic, how do we support that group to be more successful, and then think of the structure that is necessary to help the team in on the ground, it is not a good way to do that, right? So there are simpler ways to we all solve that to start with, to test any market, which is through product, write code, integrate with the right partners, make it more appealing to the customers. That's a simpler way to test any market. And we had reasonably 500 customers or something like that in Europe even before we tried doing this. But even then, what we realized was very hard was, what is that that's missing for a salesperson to be successful? When we hired a couple of salespeople, and then when they brought the 50K, 100K deals, our realization was that without the pre-sales people to support them on the ground, or continuously having the right support structure to also fast track their learning process, like onboarding time, 3 to 6 months, how do we help them prepare and learn the product really fast to be successful? Those things, we had to invest in that a little bit more than it's much beyond just hiring a few salespeople and then hoping that somehow the organization facilitates it. Those were some missteps. So the biggest learning when it comes to geographic expansion, especially local hiring, is making sure that we start with leadership hiring for somebody who's invested in the success of whoever that you're hiring. Right. So we started with hiring the sales leader there in that geography, and then the salespeople, so that the gaps in the organization are highlighted by the sales leader and gets conveyed on the ground, and we can actually go fix it and then help them faster. Was one of the key learnings when we started hiring locally in the upmarket move process. But other than that, I think we all do the rest of the things which are normal, which is like making sure we are localizing currencies, language, support hours, and integration partners to make it appealing and things like that, or the product side of things that we did ahead of that before with the geographic expansion.
Yeah. So can you talk a little bit about org building in more specificity, right? I mean, I know a little bit about what you've tried to do in the US, but you mentioned earlier that it's now a full-fledged org, right? You're still largely based in Chennai, and although you do shuttle back and forth, I'm sure this year has been an interesting year. But when is the right time in your mind for India-based startups, right, that are selling primarily overseas, right? And there are multiple schools of thought. The most common one is one founder at least should be based in the US right from the beginning, and at least the customer-facing person. You guys have not done that, right? And in hindsight, was that the right thing to do? And how have you built the org in the US over the years?
Sure. Absolutely no regrets about the decision to stay here. Still, thankfully, going well. I think some of the advice from operators who have scaled nicely was very, very helpful from the $5 million plus stage. One of the first observations when Insight invested in Chargebee was, hey, looks like pretty much your middle management doesn't exist. Like pretty much all decisions are coming to founders, whether it's engineering product decisions or GTM. If I ask who's responsible for this, again it comes back to founders. So first thing you need is let it be the founders in these layers, but hire your managers first, so that when you go from 5 to 10, you have the managers who are making who are executing most of these things from the decisions that are already made, right? And so the first $5 million, at least till we got to that. This is real, and it is possible to actually build a large company that doesn't sink in, right? Where it's always about heads down, focused on figuring out things one step before the other is how the mode is. But I think getting to that point, and then when the data actually says that, hey, this is actually going to be real and it's going to become large, was when it hits. And thankfully, we listened to that feedback and observation, because we didn't see it ourselves. So then we decided to build the manager layer. And that was a little painful. I was very surprised how painful it was to actually introduce the manager layer inside the organization, because suddenly you are looking at some of the peers becoming managers, and then some of them may be first-time managers. And one challenge is some of your people accepting this, suddenly the peer who may have more experience, but still a peer becoming a manager. That creates some organizational challenges in terms of retention and all of that. The second one was also um, the rockstar individual contributor becoming responsible for people. How much time is necessary to coach this person to ensure that they really start learning to own it's a responsibility, not a privilege, right? So how do we teach that? Now, suddenly, if a startup becoming this, we realize that now from every day going in and then looking at number of leads, what else are we going to do? Now, suddenly you start shifting your focus towards people side of things a lot more about helping these people, and you don't want to take the steering wheel again, right? And you have to trust them, and yet we have to become coaches. Was an interesting transformation. So that went on while we were also scaling this revenue, that manager layer. And then the realization was now we needed the director layer, so that when we are heads on focused on this current month and current quarter, how do we pull ourselves out so that there is a next level of people who are able to take care of that, and we are able to focus on the year ahead, was the next challenge. Um, and so it started, there were a couple of ways in which we approached it. One school of thought was, hey, you probably getting to the 10 million, you should probably hire a CRO, right? Especially when we are looking at upmarket move and all of that, do that, and all those was there. Another school of thought was, if you focus heavily on the sales and the upmarket move too soon, what might happen is the sales team might actually figure out how to sell, but the problem is you will get pulled in all directions if the customer segmentation, the product feature discipline is not established methodically, because the product was still founder led. So what we did was slightly counterintuitive, where we said we hired a CPO first, and then allowed the person to come in, look at all the data, and then tighten the roadmap, and then bring in the product discipline to make sure that we were strengthening whatever was working. Let's make sure that's done well, and then have a methodical plan to move up market. And it was very interesting because only when the CPO came in, even conversations like how to point the entire company in a single direction using these segmented, the names for the segment, all of those conversations started happening, right? And this is what I was mentioning earlier, Sanjay, which is the startup, scale up and grow, the definitions and all of that. It did not feel very natural for us, even though we had segmentation. We were trying to align with the natural segmentation of a Gartner or somebody else. Nothing wrong with it, but we also had to do that based on our customers' data, right? Our customers were all SMB to mid-market, and the traditional number of employee-based segmentation did not really align with how the customers were buying the product. So we had to find our own metrics in terms of how to segment and then label it. So our organization was aligned in a directional execution based on this. So CPO decision was good, was very important for us to actually bring that focus. And then we focused on the upmarket move, and then hired the CRO more than a year and a half later. This slightly change in approach was very important because we could strengthen whatever was working before we actually pull the company up in the execution consistently. And then we could point to the salespeople what to sell and whom to sell, rather than the salespeople somehow selling and stretching the organization to try and sell, figure out how to win the customer. Like the reason is you could bring let's say somebody like an e-commerce company, subscription company at a 25 or $50 million, $100 million e-commerce company to the table. But the problem is our product the right one for them then? Definitely not, right? At that time, we would have been stretched thin if we had tried to meet the needs of that customer.
Right.
But the problem is you have put in so much effort into getting them at the doorstep that you don't have the heart to say walk away that easily, because the deal size might actually be like, holy shit, this is like all the deals put together kind of size. And then you would want to do everything.
Not biting off more than you can chew, basically, is
exactly
a critical thing.
When to walk away. And we needed that voice, right? And that stakeholder was the product leader who is not the founder. Right. So building that executive team, strong executive team, was the key. So to go back to your question of how we actually thought about this, we deliberately started with hiring the person in US because there are fewer people available in this local market to actually hire. We've been through the cycles of upmarket move and also scale. And then with the CPO, then we hired the CRO, and then aligned sales, pre-sales, and customer success together. So all of these transformation was from founder led to the executives led, and the founder's role then became walking the perimeter, and that continues to happen, right? We have joint responsibilities, but we trust our executives to now run, and then our job is to continuously enable them. How we are continuously transforming ourselves to ensure we are helping them. So that in the gist is how we have tried to hire the leaders in different geographies, and also setting up multiple levels of structures in there.
Fabulous, fabulous. And so coming back to SaaS, I mean ultimately you are also a SaaS company, and your customers are a bunch of SaaS companies as well. And if you go and look all over the internet, there's a whole bunch of metrics. SaaS metrics in itself is almost like one could do a thesis on it, right? What in your business has been the most, I would say, the 3 to 4 most important metrics that you all have tracked, and what is the because you also talked about metrics to characterize your customers as well, right? In terms of the number of users was not the right metric for you as well, right? So uh, as you've built this and as the business has evolved, right, what have been the key metrics that you all have tracked, and what yeah.
Sure. Early stage, I think it was very important to find what our North Star metric was. Right? Revenue could be, but the problem with revenue alone as a North Star metric is it's going to be an iterative process, and it's very hard to get it right first. So what we found for ourselves, the North Star metric was our customers' revenue and overall how much did we process as a company. When then we could say, okay, who was using the product really well? If they are monetizing, if that's growing, then we are growing well. Then we started applying that to cohorts of customers that we were winning as well, because we had freemium. Again, we had to track this as cohorts of customers who were moving out of freemium into paid, and how the revenue cohorts were building up. So what told us some of the bad story, I think more than which metrics to track, I think how did we know we were not having the right product market fit around that $500,000 stage was logo churn was high, but more importantly, the revenue churn was really definitely not in the right direction. Right? It was not getting to the net negative, where there was not enough upgrades, there was not enough even overage, where the customers were not, the cohorts were not building up, even in the North Star metric. And when you know that something is wrong, where the churn is high. If you had 100 customers at the point where you're at a $500,000 mark, and then if you want to find the next 500 or next 1,000 customers, definitely there are going to be that out of the 100 customers, maybe your 20 or your 50 customers are your best customers. The other 50 probably are not your best customers. Now, how do you make sure that you get more of the 20 or the 50 that you want, and make sure that you get most of them for the next 1,000? Right? That is what we want to do. And when we look at it through that lens, I think we will, depending on the business context, I'm sure we'll all figure the right metrics, which is NRR is very, very important. Segmented data, when you're past million or 5 million mark, it's very important to start segmenting the data by whatever slice that works for the business, but also start looking at churn metrics, NRR metrics by segmentation. That was one of the biggest changes for us to know which segments where we had to put in more effort into retaining, where the churn is really happening and all of that. When we look at it in aggregate, it somehow hides the real story. So segmented metrics of customer acquisition, activation, new customer ASP, and also churn and NRR were very, very important. And the qualitative metric is the one where churn reasons by segment, which is deliberately making sure customer success or somebody in the team is reaching out to the customer to understand the real reason, right? The product can facilitate the churn. You don't want to create friction in the process. At the same time, you want to know why churn is happening. And the reasons are very different for different segments of customers. So the qualitative metric plays a huge role in the 1 to 5 million, in my opinion, because it told us a lot of things about some of the difficulties in, okay, somebody paying $299 per month, but then churning out because somebody, the organizational priority changed. The purchaser started prioritizing something else, and the rest of the organization was not aligned in implementing it. So it's actually an implementation churn rather than problem with the product. So then how do you solve that? It has to be a process driven change where we had to either get an annual commitment or an implementation fee as a friction point that drives the customer to commit longer or commit seriously
Hmm.
before you get them in. It's not about the money, it's more about the commitment, and that helps the churn. Otherwise your metric looks like, oh, we sold $10,000 of $100,000 of ARR, but next month you would have lost another 10,000 or $20,000 of that ARR, right? And what's the point of actually winning $100,000 when the loaded cost of all of that goes into the LTV, CAC, all the metrics starts looking bad. So more than the key metrics, I think one learning from us was for us was segmented metrics, especially the key metrics, and also looking at first principles reasons for churn were very helpful for the especially the early stage.
Got it. So I want to talk a little bit about partners here, right? And larger companies that, because right from the beginning, you've sort of been a layer on top of several of the payment gateways. There's always been talk about, why can't, some of the big names in the segment do it themselves and things like
Correct.
that. And yet they're also, very important partners for you, right? So there's a little bit
Correct.
of a,
Frenemy relationship.
yeah. And I was going to say, can't live with them, can't live without them sort of situation sometimes, or a possibility. How did you approach that? And, did you work closely with some of these companies to help you win business as well, through their partner programs? So explain to us how SaaS
Sure.
companies can leverage partnerships intelligently.
Right. So we are flanked on three sides, right? We play a pivotal role in. It's an opportunity as well as the same threat, which is the CRM side, Salesforce, HubSpot, Pipedrive. We have integrations with them. On the accounting side, QuickBooks, Xero, NetSuite, Intact, and then payment process like Stripe, Braintree, and all of that. And Stripe has comparable offerings now. Even Stripe Billing is a monetized product exactly in our space, and then several of that. What we have, the way we think about this is how can we be the Switzerland for billing, where there is an agnostic player necessary that allows our customers to be able to choose multiple systems, what is in their best interest as they continue scaling through different stages. Is how we think about our safe space, right? Why we should exist and why we believe we can double down on focusing on this. But from a relationship perspective, majority of our customers, when in a nascent space where most companies have in-house billing, where they have written some amount of code themselves, which they shouldn't have to build themselves, and yet they are built on top of these partners, like the integrated solutions like Stripe and Braintree. How do we then build a relationship? I think one of the things that happened was when we had the freemium, and then we were actually helping them also activate a lot of customers, early stage companies. For the partner, we were actually focused on highlighting how much volume is actually going to come through, and then we help them with a projection to say, this is how we see the trajectory going based on our data in terms of number of new accounts that you're going to get. And I could actually help promote you more and more. So instead of actually thinking about what we could actually get from them, we had the integrations, but to formalize the partnership, we demonstrated how they will benefit from that, however small it is, but painted a vision of how things can look in the next 2-3 years. And that helped secure these partnerships with Braintree, PayPal, and Stripe, and all these payment processors, key processors, and also accounting system CRM, so that we could do that. But it also, it was scary, right? It was not without these voices in the room, even within our company, to say, hey, are we shouldn't we be worried about exposing our roadmap? Are we highlighting too many of their features to our customers instead of actually like gating it? And we decided to just take the approach to say, what is in the best interest of the customer? For example, Stripe continues to be amazing in their execution in terms of innovation as well as the capabilities that they bring to the table. And we said the only way where we are going to remove entry barrier is by removing exit barriers. So we said, let's store the cards inside Stripe. Our customers are free to go and then build on top of Stripe at any point if they want to. Let's remove the exit barrier. It will remove the entry barrier. And then we also started building our features in alignment with their roadmap. For example, we had a joint roadmap when they were releasing ACH credits transfer as a capability, which was beautiful. We said, let's be the first ones to launch. So we built that and then exposed to the customers. So deliberately feeling secure about our space, and then even telling the partner that we are comfortable. You guys are the big guys. We are the small guys, but we are comfortable with just promoting your products, while we know that you may play in our adjacency, we may compete at some level. And the way it's beautifully now transforming is we now have co-selling motion in some segments, even with partners, some of these partners, where there are some segments that's not very interesting to them, or they are actually thinking of how do I do this. And we have some particular strengths in geographies or in segments of size of customers, where the sales, the way think about it is billing is a separate division, payments, they treat that as a separate division. So we are actually deeply in partnership with the payments group, while billing might still think of us as a like for like solution, and we might come up on deals and compete. That is how the relationships are evolving, but I don't think this is going to go away in a SaaS world, right? Because all of us have overlaps. And if you think about what makes any SaaS company win at a certain scale, we all want increased wallet share, and we are all going to introduce features that are having overlaps. One, to reduce churn. Second, to have ability to upsell, and also to continue to defend your moat to increase wallet share, right? And I think for all these reasons, we all do that, because your reduced cost of acquisition and increased revenue means your LTV looks really beautiful and strong. If you could build a component that customers are going to buy, but I could cross sell that to 50% of my customer base, of course you're going to build it. There is a reason to do it. So this best of breed versus best of suite is only going to move in a direction where we are going to see more of that, and overlaps will happen. But I think this is what has helped us. And the narration we have is, and strongly the direction where we are moving is, we believe that if we act in the interest of our customer to be the agnostic player as a Switzerland for billing, there is a space for us to continue doing that, to develop that. And with that, we have set up the partnership team to say, be open, and let's just work with pretty much all of them where there may be competition.
So let's flip the things a little bit now, right? I mean, we talked about a David and Goliath sort of partnership where you're the David, but you guys are fast becoming a Goliath also, right? And there will be younger startups, smaller startups that will be perhaps looking to partner with Chargebee, right? And so are you open to that? How do you see that develop, and because once again, you could always look at it and say, well, I can build this stuff myself. Why should I be partnering and exposing my customer base, perhaps, right? So
I think so.
how does the company, make that transition, right? It's more a mindset thing rather than
correct. Oh, absolutely. I think beautiful question. We already have examples of that, which is analytics is a space where we play in the adjacency. We have our own revenue story, analytics. But from the beginning, when we started working with Profitwell as well as Chartmogul and even Barometrics, especially Barometrics was fairly new in the integration. Chartmogul and Profitwell, they asked us, and then we transparently told them. I remember meeting Nick Franklin of Chartmogul as well as Patrick Campbell of Profitwell, tell them that we don't have a sophisticated analytics, but then I wouldn't rule it out, because this may become a reason for churn, or it may become table stakes for winning a customer, which means that we will build it. But we are happy to expose everything in the API, and we will not hold back when it comes to the data. You tell us what you need to deliver the best experience for customers. So we do real-time integration with them and also expose it. At the same time, we are focused on our customers to make sure that we build the best analytics system. And I'm sure that each of our product takes a roadmap based on where our customers are pulling us. For example, if you take Chartmogul, they have been focused on things like bringing in CRM, marketing automation data, mashing that on top of existing system data, and then creating a combined system that actually measures SaaS metrics with something else, right? Other data, and provides them something else. So their customers are pulling them in a particular direction. So your point, the question is spot on. It absolutely requires a mindset shift to make sure that we don't become that closed company the moment it becomes about us, right? So the way we are internally again and again driving the narration is to make sure that we build an open ecosystem, open API, allow others to build on top of that. Just be transparent with even the smaller players who are building on top of it if there is any question, because we don't want those smaller companies to think like you screwed us over by doing something bad, right? And that shouldn't be the case. That's all, right? So the only way is to transparent and tell them that I don't want to hijack your roadmap, right? And we have no interest in doing that. We will also open up customers. Feel free to sell to them, but at the same time, at some point we may also build, we may grow our ambition to want to build it if we think that more customers could benefit from this, right? But it might also lead to a point where we might be able to acquire some of those, right? It might make sense as well. That's how we directionally think about it, Sanjay.
Yeah. And
anything we are missing?
Sorry?
Anything that we are missing that we should do better, right?
I think being transparent is the most important thing, right? I think none of us, I mean, no two companies are swearing that they're never going to tread on each other's toes. But as long as there are no, and as long as that expectation is not set, I think that's the fair thing.
No breach of trust.
Right? Yeah, that's exactly right. And that is, I think, the biggest thing. And as long as you're also exposing and you don't like turn off APIs because you just released a competing product, for example, right? So those are
those kind of, that would be really bad move.
Right. So switching gears a little bit, just a couple of more segments. So it's been really an incredible last few years, right? I remember you first telling me when you first hit the $1 million mark as well, and and then you said like the freemium thing really helped the year right after that, where you went from there to to 5, and then it's just been an amazing ride, and obviously very well deserved, and a lot of hard work has gone into the company as well over the years, and a lot of it is your resilience and focus. I listened to another interview of yours where you said, look, every function is a revenue function in software companies, right? Can you talk a little?
Business. In a subscription business. Right.
But it's like everybody is tied to making the company successful, right? And all functions sort of have to be operating in alignment, right? It's not just the sales guy's job to get the revenue in, but the product guys also got to be thinking revenue. The marketing guys got to be thinking about it, support, ops, etc. So tell us about your thing of how the org has to align towards some of that.
Right. I think I just want to be careful that it's not misconstrued that the entire organization has to only focus on revenue. That's not what I meant. The two. So there is a customer delight is the only reason why you can keep a subscriber, your customers, right? That's a given in a subscription business. That creates a beautiful alignment and tension, right level of tension to deliver value. The other side is why is every function a revenue function? Is that when you take the example of what features are you going to build in a product, right? An engineering team and all of that. If you don't tie yourself to the company's growth goals in terms of why am I building this feature, in what way is it either going to delight or differentiate, or it's going to help me sell more, it becomes harder. So every function in some sense has to, and it's not just, we don't do like annual release cycles. And so that's why the thinking process has to become a revenue kind of a function. Almost every month, every quarter, everybody has to be thinking about revenue, and not something where you can just do a planning and then do a year-long exercise to release is definitely not the case anymore. That's why I was saying every function has to be aligned with growth metrics and thinking about why am I doing what I am doing, joint at the hip with each other, especially with revenue. If it is customer success, and if you are going to do, let's say, you want to increase if you want to do some campaigns to say, I want to arrest churn, right? And it is also very closely tied with retention, churn, even trying to convert your monthly customers to annual customers. You might actually get this, if let's say your churn is high on monthly customers. Sometimes it may look bad that, hey, why should I give 10% discount on an annual plan, right? It's not necessary you have to give it, but let's just say that's your only hope of retaining customers and giving yourself a chance of retaining customers annually. Like HubSpot used to do that early on, to say they were trying to actually arrest this churn by forcing everybody into annual contracts, right? And then later on, they opened up freemium. They became more product-led a little later. Now, every function has to think like a revenue function to be able to align the tactics to ensure that they are acting in the best interest of the business. And it is not in isolation. which is why I was saying the metrics that actually guide you to make the decisions, you cannot ignore the revenues impact of those decisions, whether it's customer support, because it's no longer a cost center, right? Customer success, marketing, pretty much all of them completely aligns with revenue was, and even product and engineering. That was my point, Sanjay.
Very good. Very good. Great. So, coming towards the end of our podcast, but before that, what's the next 2 years got in store for the company, right? I mean, every time you keep going to new stages and new phases of growth and execution, right? So, what are the things that keep you up now that you've sort of built out a lot of the team, become more of a coach, right? And thinking 10x from this point, perhaps, right? Yeah, what keeps you going and what keeps you worried at night, things that you have to solve next, which are like new problems to solve?
I think given the nascent nature of our category and the problem, I think the thing that keeps us up at night is the product related part, which is how do we ensure that we are actually aligned with where the customers need to go in the next 2-3 years, and are we completely aligned, is a part that we want to spend more time thinking more about. The reason being, right, when we look at how the evolution of the market is happening between the best of breed and best of suite and all of that, what we are trying to understand is what are those capabilities that would actually unlock, given the nature of our product, which is a core infrastructure for revenue and all of that, the things that we are obsessed about are helping that. Like, for example, pricing experimentation. So we just announced our price catalog and other things, which would allow the customers to be able to do more pricing experimentation. So we are now increasingly seeing more SaaS companies becoming more mature about how they are thinking about pricing and packaging, even from the earlier stages. So which means that our product has to adapt to be able to serve where the market is actually going. And it's not just about saving more money on payment processing or compliance of invoice and taxation, all of that. Those are more predictable, the compliance and other things. But the part where we are trying to read better is to ensure that the maturity of the SaaS market, where is it going, and how do we ensure our product aligned, our roadmap is aligned with them, is the part that we are trying to make sure we are directionally aligned with our customers.
Yeah, I think, I guess another way of saying it is, billing historically has been sort of a back office function that people have had to perform, but now it's getting to the point where it could be a core differentiator of, or almost an enabler of new businesses and new business models, right? And subscription billing will also sort of move into more of a, some element of variable billing as well, not just sort of flat fee per month and things like that.
And how do I want to price my product? All of that continues to evolve, which is where we are directionally going to enable customers. So are we reading this right? And how do we make sure that we double down and do more of this? Things that we are
amazing,
obsessed about. Maybe not worried is not the right word, but that's what we are trying to focus on, Sanjay.
Awesome. So a couple of quick fire questions, right? Along the way in this journey, right? I mean, now looking back, these 8-10 years, what surprised you, both pleasantly and especially pleasantly, right? I think, and of course, things that you thought were going to happen very easily never happened that easily, and things that you thought were going to be a lot harder sometimes ended up being a lot less challenging than you imagined. And if you were to do this again, what are some quick things that you would have done differently?
Sure. The thing that surprised me the most, especially in B2B SaaS, is how much people effort it actually takes. That it gets front loaded into building something really good, because there is this figuring out process, iterations, and all of that. But all of that still requires you to invest heavily in a lot of areas. And I think especially in B2B SaaS, in a nascent category, what surprises me is the number of people required to solve different problems, because you are dealing with new customer side on one side, while there is a complexity of growing customers. So the amount of effort that is necessary that goes into product engineering and all of that, I would say definitely surprised me with the number of people that is required for a product of our nature.
Hmm.
I thought this will be much fewer in terms of people, all of that, because the number of people that you add also adds or shifts focus towards making sure your management related practices and other things also, the people related practices also mature faster to support such an organization. And I think that kind of surprised me a little bit, but it's good as well, in terms of learnings. Mm. The second one is the snowball effect is hard to, even though we see that in our customers, but what does it actually take when you build momentum, and how it actually beautifully snowballs when you get your product right, features right, and then latch onto specific segments? How much momentum that SaaS builds where you are able to like build revenue is something that definitely pleasantly surprised me, because it's so hard to actually get to that the first 5, 10 and all of that, but you actually get a lot of other things like NRR metrics and clear alignment in terms of how your revenue grows with your customers and all of that. You get that right. It's amazing to see how it beautifully snowballs. That definitely, it doesn't get easier. I'm not saying that. Still hard, but the momentum shift is just beautiful to see inside out.
Right, right. And I guess along with that also sometimes I always liken it to driving a car. Sometimes you have to go back to third gear and retool a few things, build some more torque and momentum before you can accelerate again, right? You can't always be nonstop, going in one direction. And I think those are some of the moments you talked about when you have to build the next layer of the team, next layer of the processes, retool the product to be a little more, robust and scalable as you enter newer tiers of customers and so on. Any quick thoughts for young entrepreneurs starting out now, looking at the SaaS space? What would you advise them, in terms of opportunity? Is the market very crowded? How do you find white spaces?
I would say definitely focus on more than a lot of other metrics, especially getting to the first million. Focus on more first principles questions of why do customers care? Why are they even buying it? What else are they buying it? And still try to focus on, there is so much done in Excel sheets that we all compete with. I wouldn't consider this to be crowded, because there is, every time you go deeper into any slice of market, whether it's small customers, medium or big customers, there are so many inefficiencies in every type of industry imaginable. And we are having a front row seat looking at so many SaaS companies coming out of everywhere in the world, that I'm still getting surprised by the number of companies that are even coming up in surprising industries, including real estate and all of that. The inefficiencies are so bad. And also the SMB market never cared about automation because software was not affordable to that segment. And with SaaS, it has become affordable, and that buying behavior is completely shifting, where SMBs are so hungry for more SaaS products to automate things. That is something I don't think any of us predicted probably 10 years back, because SaaS used to be the rich people's enterprise game where you build something successful, go enterprise. But it is possible to actually build amazingly beautiful companies focusing on SMBs, mid-market, right, or enterprises, rather than having to move into enterprises. I think so. If you are starting out, don't think that market is crowded. There is actually so much space and room, white space that is available in every market, but only if you look close enough and hard enough to understand the customer's persona better, is my take.
Great. Krish, on that note, it's a really good encouraging note for the entrepreneurs as well who listen to our podcast. Once again, congratulations. I think it's just been fascinating what you have been building at Chargebee. And but we all know the best is yet to come. All the best, and look forward to continuing to be connected in your journey.
Thanks so much. It was fun chatting with you. Thanks so much.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.